Line is, of course, the way market is moving today. Last couple of minutes, there was an attempt to recover from the lows, but that too has been sold into. So the Nifty is down 120 points as we speak, with the Midcap index down 144 points, and the banks are again underperforming with cuts of 1.4%. So 570 points gone on the bank Nifty as we speak. The only sector in the green is Nifty IT, with the likes of TCS, Tech Mahindra, all of them at the day's high, but continues to be a down day yet again, third day in a row where we are seeing massive cuts for our own market. And Rima, we talk about pre-budget rally, but that's not in sight anywhere.
Well, even Santa Claus saluted us, that Santa Claus rally, and this time even that pre-budget rally. But this is pretty sharp, right? The cuts that we're seeing. We opened slightly higher, then there was this big decline in the markets, and then that sharp recovery. The Nifty high today was more than 17,700. So from that level, it's down about 200 points. And taking stock of the three-day decline, Wednesday, Friday and today, the Nifty is down about 630, 640 points, while the bank Nifty is down 2,900 points. On Tuesday, the Nifty Bank had closed at levels of about 42,700, 42,800. So from there, it's now approaching a 3,000 point fall on the Nifty Bank, and that is pretty sharp. And even the recovery in Adani Group stocks, which we saw in the F&O name, that's been sold into, right? So it's red now as we speak for Adani Ports.
Yes, so of course that's the big story that we are tracking, and we'll keep getting updates for you as well. But it's a result season as well, so let's get to your corporate conversation. Embassy REIT is on our radar today. The company delivered a good third quarter with revenue up 17%, even as operating margin slipped a tad bit. Note that its dividend payout ratio also rose by around 2% on a year-on-year basis. To discuss this, the outlook going forward, and what is the commercial real estate pipeline really looking like, we have with us Mr. Vikaash Khdloya, who's the CEO at Embassy REIT. Vikaash, good afternoon. Thank you so much for joining us. In 9 months, you've already achieved 90% of the leasing targets that you had set for FY23. The target was around 5 million square feet. Will you surpass it? Are you changing your guidance? Because 9 months looked really good. What kind of leasing trends are we looking at right now?
Yeah, first of all, thank you, Ekta, and good afternoon. Thank you for having me over the show. So, Q3 was another very strong quarter for us at Embassy REIT. As you mentioned, we year-to-date achieved about 44 lakh square feet of leasing. That's about 90% of the annual guidance. And mind you, the guidance that we laid out was significantly higher than the pre-pandemic average. So it just goes to show how strong, institutionally owned quality real estate, the demand for such real estate is in the country. And we continue to see global captives looking for space and expanding and setting up new centers in India. So we are very optimistic. We are very happy to deliver on this guidance. Even our NOI and distribution per unit is on target. And given that we have about 8.5 lakh square feet of Q4 pipeline of leases, we are hoping to deliver, above our guidance target. But we'll wait and see for the next quarter.
Any indication, Vikaash, hi, this is Rima here, what the leasing target for FY23 could be? 5 million square feet, could you bring it up to 6 million, 6.5 million? And even your top line guidance of about 2,700 crore, how much could you exceed it by?
Yeah, I think we are well on target. That's what I would want to say. We would obviously review our numbers, and in Q4, it all depends upon the execution and how fast we can deliver on the discussions that we are having currently. We have about 8.5 lakh square feet of live pipeline. But the more important thing, Rima, I wanted to just highlight here is that our conviction on the India office story and the long-term advantages that it offers remains as strong as ever. While we have heard about unemployment, we have heard about volatility in the broader markets, I think that's more cyclical, but India's cost advantage is more structural. And if you recollect, last time I mentioned that we have dual advantages, both of low cost and abundant talent. I think that is what is really placing us very well. And with the quality offering that we at Embassy REIT have in terms of the total business ecosystem, we are seeing disproportionate share of demand compared to what the overall market is seeing. We have also continued to see rental growth, especially in our core market of Bangalore. So overall, we remain very positive. We have in fact added 52 new occupiers in just the last 18 months. And despite the larger deals taking some more time to close, we have continued to see extremely strong momentum on the smaller and mid-sized deals, especially from occupiers like global banks, healthcare firms, as well as global retailers now. We have done a couple of deals with them last quarter. So all in all efforts are on to deliver a very strong full year numbers, by end of March.
Okay, Vikaash, this is Sonal here, not Ekta. But I just wanted to understand, since you are talking about growth or at least demand coming in from global captives, but we are in a scenario where we are talking about layoffs in global tech companies. There was also a reason where we saw Blackstone and Starwood real estate funds limiting withdrawals because of rising rates. There were some withdrawals and redemptions that investors asked for. Are these global factors not impacting Indian demand at all? And when you talk about rental hikes as well in the Bengaluru market, how much of a hike have you seen? Is it something that will continue as well?
Sure, Sunil. Thank you for that. So, a couple of things. One, India office is very different from what we see globally, right? And, we've spent a lot of effort to kind of go and reach out to the institutional investors globally, most of whom understand the India office story. And India office has continued to be very, very resilient compared to what we have seen globally. The rents in India, just to give you an example, are about $1 to $2 a foot a month. That is, significantly lower than what you would see in some of the top key cities globally. Again, the labor cost in India, the cost of a technical IT tech professional is about 1/10 of what you would see globally. So the cost advantage which India has means that the long term, structurally, there'll be more and more work that will be offshore to India. We've seen that trend in the past. We've seen that trend post the global financial crisis, and we continue to see the trend today. So one is that India office is placed very well and is very different from what we see globally. Two, while we are watching the global events, we are watching and mindful of the macro concerns, but we continue to see momentum on the ground and on our conversations. We continue to see a good uptick on the back to office numbers. We've seen a 30% increase in our own portfolio in terms of the physical attendance, and corporate leaders have been very clear that office is a place for collaboration, and hence we think as people come back to work, even more and more numbers, we will see more and more demand, especially for our kind of properties which are focused towards employee wellness and ESG. So we think that India office is really placed well.
Right. Got it. Vikaash, what is the current rental escalation that you have in your clauses on an average, and what could that number look like?
Yeah, so the market, it's pretty standard market of 15% every 3 years or 5% every year. Okay. So that forms the bedrock of our NOI growth, because that's contractual, that's a given. But more interestingly, Rima, the mark to market that we have, which is basically the in-place rentals, the existing contracts have rents which are below market simply because there were agreements continuing over the last 5-10 years. And that is the opportunity that every quarter, every month when we lease out new buildings, we try and see where we can bring those rents back to market, and that gives us an enhancement in our revenue.
All right, Vikaash, thank you so much for joining us and telling us what's happening as far as the Indian commercial real estate is concerned, and Embassy REIT in particular as well. That's the word coming in from Embassy REIT. For now, we'll slip into a short break. Up next, Mitesh Thakkar will join us for some technical trades. Stay tuned.